Good morning, good afternoon, and good evening to all our viewers nationally and globally. We thank you all for joining us today and in this special, very special segment of the REAP online conference. It is the International Supply and Demand Analysis. We are very honored to have very esteemed international speakers joining us to give us their expert opinions. I would like to thank them for taking out their valuable time, for giving us the honor to hosting them and being part of this first conference. And I would like to also encourage my viewers, both nationally and internationally, to ask any question you want to these to the panelists. There's a ask a question button on the right hand side of the screen. You can direct your questions to any of the panelists available. As we all know, Pakistan is one of the most important markets in the rice trade, and each of our panelists also thinks the same, and we are very excited to hear their point of view. I'll just give a brief introduction. Most of them don't need introductions, but we would start off with Mr. Ram Suri. Mr. Ram Suri is the head of logistics at Barnas, Malaysia. He has an experience of 20 years all over Barnas and is one of the leading think tanks for Barnas, Malaysia. And we thank him for joining us today. We then have Mr. Amiruddin Mohammed from Onikor, Comoros. Comoros is a huge buyer for Pakistani rice, one of the biggest supporters of Pakistani rice. We thank the honorable gentleman for joining us in this for this special occasion. Third, we have Ms. Judy Carroll. Ms. Judy Carroll is one of the most popular persons in Pakistan today. She is the administrator for National Food Authority, Indonesia. She has a 40 years distinguished career in public service, and it's very proud for me personally to know that she is the first female administrator for NFA Indonesia, which is indeed a huge honor. And we thank you, ma'am, for joining us. We look forward to your presentation. And we know Philippines and Pakistan have a very important relationship, and we hope to expand it in the future. We hope Mr. Nabiullah Degan has not joined us, but we hope that he will join us short. He is from ICTA organization, Iran, so we hope that he can join us during the panel. Last but not the least, I go ahead to introduce Mr. V. Subramaniam, better known as Mr. Subra. He is the Vice President of TRT, one of the leading rice analysts of the world. He is a very well-versed individual in the rice market of the Asian, African, and global markets. And he has a very comprehensive and a very interesting presentation for us today. He has been gathering all of us since 2009 in different conferences all over the world by the name TRT. Unfortunately, we could not see him face to face for the past 2 years because of the COVID crisis, but there he is in person, and we look forward to going ahead and looking at your presentation. Now, I would like to start off with Mr. Ram Suri. Mr. Ram Suri, you are the first one to give us your honorable views to our viewers, both nationally and globally, and we look forward to your presentation. Please, Mr. Ram Suri of Barnas, Malaysia.
Okay, thank you, Mr. Jahangir. Thank you. I'm honored to be on this platform together with the other respected speakers. I would like to take this opportunity to congratulate rice exporters of Pakistan for hosting the first virtual rice expo for Pakistan. Allow me to introduce myself. I have a long name. My name is Nur Ramsuri bin Abdul Rahman. Please just call me Ramsuri. I've been together with Barnas for a good 21 years now, and hopefully many more years to come. I would like to just start by giving a little bit of insight of what Barnas is. Barnas is essentially a private company entrusted by the government of Malaysia to perform certain social obligations for the government. And we also have some duties for the consumers. In return, we are given the sole right to import. Basically, some of the social obligations that we have to perform is the management of the national rice stockpile. We also have to perform the role of buyer of last resort, and we also have to manage the payment of subsidy scheme to the farmers. With that, I'd like to start my presentation. Please, Mr. Jahangir. Can you go to the first slide, please?
Press F5,
okay.
F5.
Can you go to the first slide?
Yes, sir.
First page, please.
There. Yes.
All right.
1 second.
Thank you.
1 second.
Sure.
Right.
Okay, one more back. Okay, okay. In my presentation, I'm going to cover basically on 3 parts. I'll cover briefly on the industry background. I'll talk more on the rice demand, and I'll finally end on the commercial front of Bernas. Next page, please. Okay, next. Next. Next one, please. One more. Oh, no. The other one. One slide. One slide back. One more slide back, please. Okay. Okay. Let's look at Malaysia's demand and supply. Malaysia is a deficit country. We're a net importer. Our SSL is about 60%. We are moving towards 75%, but safe to say that we are still at 60% level at the moment. Our annual consumption, you can see from this slide, is about 2.7 million metric ton annually. We produce our own local rice about 1.6 million. So if the shortfall is about 1 million, that is the amount that we need to import annually. Next slide. Okay, on the Malaysian rice supply chain, this slide is just basically to show where is Bernas' involvement in Bernas is also involved. You look at the bottom part, we are also involved in the downstream, i.e. at the wholesaling level, where we have our fair share of brands in the local market. Next slide. Okay, since Malaysia is a deficit country, we need to ensure that our rice is available throughout the whole country at any point in time, and hence the need to ship the goods to the respective destinations. We have 11 ports altogether, gazetted ports. Logistic is key. We need to always ensure that our supply of rice is on time, in full, and at the right destinations. Okay, let's move on to our rice demand. Next slide, please. Okay, if you can see from this slide here, like I mentioned earlier, our import is about 900,000 to 1 million ton. Our import volume annually is about $410 per annum. Last year, 2020, was our highest ever import in the last 11 years, partly because of COVID-19. Rice is a staple food for Malaysians. Our annual per capita consumption is about 77 kilo per person per year. However, in the urban areas, it is not that high because our people are also enjoying other types of food such as pasta, burgers, pizza, fried chicken, you name it, everything, especially the youngsters. But during the pandemic, we started in 2020 with the lockdown, the no dine-in policies allowed at the restaurants and whatnot. Most people have gone back to basic, i.e. eating rice, and we have to eat at home. So that's one of the reasons why we import more last year. High international price is also another factor that has kept the, if I may say, the unaccounted sources to a low level. For 2021, we expect our import volume to remain high, probably around the same level of 2020. I would like to bring the audience to the right hand side of the presentation. If you see here, in terms of importation by country, you look at that in 2019, almost 90% of our import came from Thailand and Vietnam. But in year 2020, India, Pakistan, and Myanmar accounted easily about 60% of our total imports. Yes, Vietnam still command a high percentage in 2020, but that is no longer the case in 2021. I'll cover the stats for 2021 shortly later. Next slide, please. Okay, this is our import by grade category. For the past 5 years, if you can see here from this slide, 75% of our imports are white rice. We also import fragrant rice about 15%. There's about 120,000 per annum. We are not big in glutinous. It's averaging about 30 to 40,000, accounts about 4% of our import. Again, we are not big in basmati as well. We are doing about 40,000 on average for the past 5 years. And we also import other types of grades such as pony rice, Japonica rice, and all other specialty rice from all over the world. Next slide. Okay, these are just statistics for what rice. I would like to share here. The point I'm trying to make here is this. If you look at 2017, 18, and 19, when the prices were not as high, at the range of 330 to 380 level, we bought mostly from Thailand and Vietnam. And when the price gap between countries are small, the preference for our consumers are for the rice coming out from Thailand and Vietnam. However, looking at 2020 and 2021, we have shifted most of our rice from India, from Pakistan, as well as of Myanmar. So although there are some preference of taste by the customers, but price is key. When the price is big, when the price is high, when the price gap between countries is big, we just have no choice but to source for a cheaper origins. Next slide. Okay, I'd like to zoom in into year 2020 and year 2021. If you look on the right-hand side, the importation by category in terms of percentage remains almost the same. White rice is still 75%, fragrance still at 12 to 14, basmati is about 5 to 6%. But if you look on the left-hand side, the importation by country have shifted mostly to India and Pakistan. In fact, up to June, these numbers are updated until April. If up to June, our purchases from Pakistan have gone up until 27%. India, of course, they still account a major portion of our importation because of the competitive pricing. But I'm looking at the second half outlook is going to be from India, especially and for Pakistan towards the year end when the new season is in the market. Logistic wise, we face a huge logistical problem for shipments coming out from India. But however, we are feeling less of a pressure for rice coming out from Pakistan, which is very good. Meaning, whenever we do buy rice from Pakistan, we can be assured that shipments are going to be on time, unlike for the logistical problems that we had in India. Next slide. Okay, a quick look at basmati. Like I mentioned earlier, we are not big in basmati. Our volume is quite small. We are doing about 40,000 annually. Unlike white rice, basmati is meant to cater for the high-end market. Prices are not so elastic. If you see, in the past 5 years, 75% of our imports came from India, a quarter from Pakistan. The grades that we brought in are 50% raw basmati, another 50% are sela rice, parboiled or steamed rice. I would say that looking from the statistics, India, in terms of branding, in terms of quantity of supply, they had a head start in Malaysia, but I think that is not for long. Hopefully, we'll be seeing more basmati coming in from Pakistan in the future as well. Next slide. Okay, fragrant rice. Fragrant rice is a popular rice in Malaysia. We import annually about 120,000. We used to buy a lot from from Thailand those days, but Thai Homali prices now are commanding a very premium price. So if you look at the past 3 years, our imports now are mostly coming out from Cambodia and Vietnam, in fact up to 95%. Yes, we still do buy rice from Thailand, but it's very much for the niche market. Next slide. Okay, for glutinous, again, this is something stable, something that we import in annually. If you look again, over the past 3 years, most of our glutinous rice now come from Vietnam. In the past, if I were to bring the years further back, most of our glutinous used to be from Thailand. However, because of the price differential now, glutinous Thai glutinous price is so expensive, so we have shifted mostly to Vietnam. And in fact, in 2021, almost 100% of our glutinous is from Vietnam. I'd like to cover on the commercial front now. I think next slide. Okay, I'm just going to cover this briefly. If you look on the commercial front, Bernas Group brands accounts for almost 50% of the market. our brand presence are stronger in West Malaysia as opposed to East Malaysia. If you look at the names, for example, Jasmine, Faiza, YHL, these are all our JV companies where we own the brands through equity in the company. Next slide. Okay, this is my final slide for the day. This is just basically a snapshot of all the brands that we have, our group brands in the market. But the point that I'm trying to make here is this: our group brands are not solely commercial. They are also an important tools for supply sufficiency as well as price stability. That's my final slide. With that, I'd like to end my presentation with our slogan. For Bernas, for us, it's more than just rice. It is our dedication to the nation. Thank you.
Thank you very much, Mr. Ramsuri, for this insightful presentation. It was very good to hear the past 2 years, Pakistan is one of the preferred destinations for Malaysia. And we are happy to see the trade going up, especially for 86 white rice over the past 2 years, and hopefully it can continue in the future as well. Thank you very much once again. I would next like to call upon Miss Judy Carroll, NFA Philippines administrator from the side of NFA Philippines, the first female administrator, I might add. And we thank you for your presence here, and we look forward to your insightful presentation on regarding the international supply and demand and how NFA Philippines has the view on the global market as well. Please take it over, Ms. Judy.
Thank you, and good evening. Thank you, Rip, for the invite. And I'm happy to see you again, even on virtual. Good evening to everyone in the Philippines. Time check is 7 o'clock and 5 minutes, Philippine Standard Time. I will be discussing to you Republic Act 11203, that is the rice tarification law. And the objectives of the rice tarification law is to improve availability of rice.
Miss Judy,
yes.
if I may interrupt, I'm sorry. Can you just make that once full screen, please? You're getting 2 slides, if you don't mind, please. Make it into 1 slide.
Is that already the 1 slide?
If you make it full screen, we're getting double slides, please. Yes, perfect.
Okay.
Thank you very much. Thank you very much. Apologies.
So I will go back to the start, and the objectives of the rice tarification law is that to improve availability of rice in the country, prevent artificial rice shortages, reduce price of rice in the market, curtail the prevalence of corruption and cartel domination in the rice industry, and the removal of quantitative restrictions on importation of rice. So that is the objective of the law. Now we go into the effects of that tarification law insofar as the National Food Authority is concerned. The mandate of the NFA now under the present law was limited solely for buffer stocking, solely sourced from local farmers. NFA likewise ceased regulatory functions effective March 2019. And then we have the liberalization of rice importation. Any person or entity willing to pay tariff taxes can import rice in the Philippines under the present tariff regime. Likewise, the power of the National Food Authority to import and to manage rice importation like what we have been doing in the past, it was likewise removed. So that is the effect of the new tariff law insofar as the National Food Authority is concerned. Now, very recently, on June 2, 2021, to the happiest moment of the most favored country, the President issued Executive Order number 135, which is the Customs Modernization and Tariff Act. You know, the Republic Act 11203 was enacted by Congress. Therefore, there are specific provisions of the law on the rates of tariff. However, the President has the power to issue executive order when the Congress is not in session. And that is why the President was able to issue Executive Order number 135 dated June 2, 2021. What is now the effects of this Executive Order? And the tariff, this Executive Order. We will see that there is a reduction of tariff rates of imported rice coming from the most favored nations, not part of ASEAN countries, from 40 to 35% for MAB-in quota and from 50 to 35% again for minimum access volume out quota. The resolution is effective for the period of 1 year to diversify the country's market sources and augment rice supply, maintain prices available, and reduce pressures on inflation. Likewise, the tariff reduction resulted from increase in the global rice prices and the uncertainties surrounding the steady supply of rice in the country. Philippine rice importation with Vietnam encountered a lot of challenges due to imposed government policy restrictions during the regime of this COVID-19 virus. Likewise, the Executive Order 135 lowered tariff is meant to attract other countries like India and Pakistan to export rice to the Philippines because this has been the request of both countries even in the previous years. Next slide. So if you look at the world's major rice importers from 2017 to 2020, the Philippines ranked number 4 with a 1.5 million metric tons, as against China, the first, Nigeria, second, European countries, Union, 2 million, and so on. So if we see the share of Philippine rice imports to global rice trade for calendar year 2020, the Philippines got 2.1 million. So if you look at the Philippine rice importation arrivals from calendar year 2005 to 2021 in million metric tons, this is pre-rice tariffication law implementation. You will see that after the rice tariffication implementation, we have a lower importation in terms of the volume. We had the highest volume of importation in 2008 and in 2010. Now we go to the percentage share of Pakistan rice to Philippine rice imports in metric tons. You can see that in the year 2005, the volume of Pakistan rice was 15,000. Total rice imports 1,838,844, and the share of Pakistan rice to Philippine rice imports is 0.82%. So as we move along, the highest volume of importation from Pakistan was in 2010 with a 7.03%, and then in 2011 with 7.95%. If you look at the importation from of rice, Pakistan rice to Philippines from 2013 to 2017, we had in 2018 we had 2.83% of the rice imports. In 2019, 1.23%. In 2020, 0.43%. In 2021, we have a 0% because of the COVID situation, pandemic. So if you look at the Philippine rice markets and the prospects of Pakistan rice in the Philippines, we can see that Philippine importation of Pakistan rice mainly depends on the decision of local rice importers, taking into account the following factors: prevailing global market situation and outlook, world market price of rice, the shipment period and cost of freight if we compare to sources within the ASEAN region, and then the production, consumption, and the prevailing local rice prices in the Philippine market, and the rate of return on investment. So if you look at the benchmark of the world market price of rice, the price of Pakistan is cheaper than Thailand and Vietnam, but India is cheaper than Pakistan for the 25% broken. For the 5% broken, likewise, Pakistan's rate is lower than Thailand and Vietnam, but India is lower than Pakistan. So these are the benchmark in world market price of rice, FOB in US dollar per metric ton. This ends my presentation, and we can discuss further when the Q&A will come in after the speakers have made their presentation. Thank you so much, and good evening.
Yes, thank you very much, Ms. Judy. It was a very brilliant presentation from you, and we thank you once again for your time, for your valuable time. It's almost 7:30 in Philippines, and quite late for you, but despite the timing, we thank you for joining us. Thank you for giving us the honor with your presence, and hopefully we can build up on the volumes in the coming year from Pakistan. Next, of course, I would like to invite Mr. Subra from TRT. Mr. C, everyone's quite aware of who Mr. Subra is. He's one of the most well-known faces in Pakistan. He organizes the TRT conference every year since 2009, and he has a very detailed analysis for us. And Mr. Subra, without further ado, I would like you to take it over. Thank you very much, sir.
Well, thank you very much for inviting me for this August occasion. I want to wish REAP and Pakistan Rice all the very best on the road ahead. So I've tried to compress my presentation into something shorter than I had originally submitted. So I'm going to try and race through this one on some of the key highlights on a global level. I think what Judy has brought up, as well as what Ramsuri has brought up, is an emphasis on price. And one of the big changes that we're seeing, especially since September 2020, is the cost of shipping. So everyone's worried about the landed cost of rice more so than the FOB price, because shipping percentage as a cost percentage for the CIF price has become a much bigger portion. So that would be the first point I want to drive home. Okay, now let's look at the presentation. Okay, that's a little something about my company. We provide market analysis to help you improve or make good trade decisions, and risk management. I don't need to tell you more. A copy of this will be available to whoever wants it. And basically, I wanted to take you through the presentation. And these are some basic look at demand and supply on a global level. I'm going to go through USDA numbers. I'm going to talk about the highlights very quickly. It's about India's rise since March 2020. And really, it was very interesting that India came up then, because that was the same time when we saw panic buying in Myanmar, panic buying in Singapore, panic buying in Malaysia even, and suddenly people are worried about whether they have enough inventory to take us through. Then the second part of it is a very important part and maybe connected to India's recent sale of broken rice to China, as well as Pakistan's success in selling to China. This feed industry demand from China, it's added something like 17 million metric tons of demand. Most of this is for corn, which has gone through the roof in terms of imports, but it's also fed the broken rice trade, which I'll take you through. And then last but most importantly, I think this is the real concern today, is the cost of shipping. Container freight today is at an all-time high. So any business in containers, and most of your high-value cargo, basmati, hommali, fragrant rice, anything that's considered specialty, is going to probably be affected by surging rates. And we're talking about additions per metric ton basis of anywhere from 100 to up to $200 or $250 per ton basis influence. That's a very big impact. If you compare the cost of your landed rice same time last year to now, you're going to see the difference is mainly in shipping. The actual FOB prices are actually relatively calm now, but we start looking forward from there. And then I just wanted to say a few words. There are experts on basmati rice here who will tell you far more. But I feel that it's been a struggle in 2021, mainly because of shipping, but also very important that we've already seen other speakers cover it earlier today on food safety, residue limits, and various other elements that are showing up as a very important feature in basmati rice market. Then I'll show you some complaints. So the thing is that what has happened in the last year? We saw Nigeria borders open, Bangladesh, just a second, let me try and give you some pointers. Nigeria borders open, so we've seen that parboiled rice demand. Bangladesh has come in with as much as 1.5, maybe 2 million tons of import demand. Chinese broken rice demand, as I mentioned earlier on. Vietnam bought Indian brokens, nearly 250,000 tons. Indonesia, we know that there's a permit for 500,000 tons to 1 million tons, but when you look at the local prices in Indonesia, prices are coming down, consumption is coming down per capita, and there may not be that immediate need. Philippines as well, very interesting because every year Philippines shows a want to improve their production, but you always have to deal with typhoon season and exactly how this is going to, and maybe some of the rationale for that new rule about tariffs is come down to the fact that the landed cost of rice is making it difficult to manage food security in Philippines. And we're talking not just availability, but rather food inflation. So when you have such high shipping costs adding to the landed cost, the cost of imported rice and the price of domestic rice is too close and to make any of the imports really work. This is actually making it Philippines show a slightly lower rate of imports this year as far as we can see. From a supply point of view, Thailand's looking good, improved after 2 years of drought. Vietnam production is improving, but you know what? Vietnam's producing less white rice and producing more GTA 5451 OM rice and the fragrant rice and glutinous rice varieties. We also see India having a third, possibly a fourth consecutive crop if the monsoon goes well. What's most important about India is this free food program. India has single-handedly been able to release anywhere between 30 and 50 million tons of rice. It's prevented starvation in India, but you know what? It's also helped the global import market benefit from some very attractive prices. So my question is, 2020, we saw India release free food program. 2021, it's been assured until Diwali, which is October, November period. So that means 2021, it looks secure in terms of Indian supply. It's more about India getting past COVID and getting past all the delays in their shipment areas, which is showing some positive signs right now. But what about 2022? What if India doesn't have this free food program to back up the exports like it has? Today, with that free food program, people are talking about India exporting as much as 20 million tons of rice. That would be almost half the world trade. I'd say about 40 to 45%, without thinking too hard about it. No, in terms of global crop outlook, US crops look weaker, and South America is at a record level, but unable to compete with Asia simply on price. You're talking about $600 rice in South America compared to something that's closer to 400 in most parts of Asia. Today I think 5%, 440 or thereabouts you can get. Pakistan is not that far, whereas India is the only one below $400 FOB. Once you add the CIF prices, you also understand why India and its break bulk shipping abilities is showing up more prominently in the world market. Now the risk in 2021, coronavirus, we hear it. I think when I talk to our European clients, they're asking me, hey, are we going to have a physical event on the TRT World Rice Conference in Phuket? I heard Phuket's allowing everyone with a vaccine to come to the market, to attend an event. I said, have you seen the news around Asia? It's all rising here. Vietnam's got restrictions. India's got restrictions. Malaysia, where I live in, we've got restrictions. In fact, I'm working from home as a result of it. So the thing is that the situation is still quite fluid, but we remain hopeful. In 2020, we were hoping 2021 will be a better year. In 2021, we're hoping sometime in the future it's going to be better. So the thing is that it's really an issue. The rising cost of shipping, I can't say it enough. I'll show you some charts that really just paint a picture. The reality is how you work with people, whether you want to deal with FOB prices, whether you want to deal with CIF prices, these are the kind of commercial decisions traders have to make. Okay, now weather concerns is always the big what if factor in rice. We've got the monsoon coming up. For now, everything looks rosy. The early rains have come, and most of India is looking positive, or at least towards a normal planting. Even in Pakistan, some people have told me that the planting is good enough to expect maybe as an earlier arrival season. But that was the same we heard last year, except they had late rains that spoiled that show. And in the end, Pakistan rice came a little bit later than expected in 2020. Looking at La Nina, we think La Nina came and kind of was relatively subdued this year. So we kind of escaped that one. But if you look at the US, maybe the US West Coast and some of the southern states didn't get away with it. They have some lower crop, and but the US market is not so important from where we're talking from an Asian perspective. China's feed market, this is a very important dynamic. 17 million metric tons. And if I show you the USDA data later on, you'll see that most of the consumption growth in world rice market is coming from China. So keep that in mind. Myanmar, the military coup, to some degree, it's removed a competitor from Pakistan. But this year has been more about India's dominance than about Pakistan competing with Vietnam, Thailand, and Myanmar. It's been a very resurgent and strong presence from India. So this is what I wanted to show you. If you look at this portion of the chart here, sorry, I'm going to move our speaker panels there. This is the first time, 2021 and 2022 is the first time in a long time that we've seen consumption on a global level. This is USDA numbers available to anybody. I can show you how to get it. It shows you consumption rising above production. So it doesn't matter how well the world is producing rice. The world is producing more rice, but 2021 and 2022 is showing that consumption is outstripping production. This is a bullish signal, if you want to call it, when you look at prices and where we're looking at. So big buyers, we have the Philippines and Malaysia in the room. They will be looking at these as well as the dynamics, look at their supply sources, not rely on just one or any particular. So a lot of the decisions we've seen from the Philippines and from Malaysia make sense in terms of what we're heading towards. This is what I wanted to point out. Now this is done for production. I've updated the latest ones just for a report that I'm publishing this weekend. It's even, the production growth is more than this, but it's rising. What's the important message here? Consumption is rising faster. And much of that consumption rising is coming from China. There's also an Indian element. but the China consumption is a driver, which I don't have the correct data here, but the latest data that I'm looking at for the week's report shows that. Okay, so sorry, I'm just going to try and. Now, this is Indian exports, which I think is very important in the current scheme of things. Basically, we are looking at Indian exports by grades, and we've seen all kinds of rice show an increased uptick. A lot of it, this is an annualized basis. We've seen 2020 outperform any of the past years after the ban was lifted in 2011. So 2012 onwards, it's been more than 10 million tons total, but 2020 was an especially strong year at about just almost 15 million tons. This is a calendar year basis. This is what we have up to January. I can show you that up to March, January, February, March, India exported about 2 million tons per month. That's more than Pakistan 1.5 times. That's more than what Vietnam and even Thailand, more than Thailand does in a whole year. So that's how important India has become. And it's showing up in all kinds. If anything, basmati rice sales have been slightly weaker, but started to pick up only from March. No, but it's nowhere near the past years. Now, this is shipping. This is dry bulk rates. This is where we are, I think, last week, 2 weeks ago. If you compare it, I took a long-term look at it. You're going back to 2011. Now, anybody who remembers that 2008 to 2011 period where we saw record shipping rates, this is what we're looking at. If you look at the newspaper every day, you hear about rising shipping costs, inflation. They're all kind of tied in. When you have such high shipping costs, the cost of everything that you import, it's going to get more expensive. And that's just the natural. This is a shorter term period where it shows you the freight rate rise. But what your interest our side in rice shipping is interested in the smaller segments. So this is really looking at handy size, Supramaxes, and the Baltic Exchange. So the thing is that really this drop in the Baltic Exchange is more reflective of what's happening in the Cape size market than on Supramax or handy size. Now, this is the other one. This as per 21st May, and I can tell you that it's not slowed down. This is container freight rate, record levels. I'm just comparing this year to last year. So when I say sort of September, this is where September is. So we're really seeing an unprecedented rise in container shipping. A lot of exporters are even afraid to quote CIF prices because they don't know when or what they're going to ship in terms of shipping. And the quotes from the shipping agents or ship brokers, they don't last much more than a very spot decision to accept it or not. So these are kind of challenges that the rice industry is facing. So just wanted to talk about broken rice for a moment here. This is tied into what we talked about Chinese demand. And if you look at this green line really is showing India. Now, I drew a trend mainly because I took January to March exports from India and I multiplied it by 4. That means I'm assuming that Q1, it's not going to happen that way, but something similar could show up. Why is January to March so interesting? Because India has sold the most broken rice to most African markets. India has sold to China. India has sold to Vietnam. So there's this sudden Asian element that's in this picture. And that's where the demand is coming from. This is just broken rice. Again, this is looking at India's exports in 2021 by destination. You see this, Vietnam, 247,000 tons. China, 311,000 tons, mostly brokens. Vietnam is not mostly brokens, but it's there's more brokens than white rice, than the milled rice. Then you have the African countries here with Senegal, still the largest, but Senegal used to be almost dominating 80% of the Indian sales, whereas today it's sharing the market with Asia. So this is a very interesting point that leads up with the Chinese feed demand, which is a driver. And I can tell you from January to March data for Pakistan that we have for 2021. You've seen African sales to Pakistan sales to Africa drop by 50% compared to the same time last year. But we've seen Pakistan sales to China hit new highs. So really, Pakistan's been selling more to China and less to Africa. That's the main big volume trend that we see. There's no doubt that Pakistan has got key sales to Malaysia, to Indonesia even, as well as if you want to talk about Afghanistan as an important border route, these are all very important from a Pakistan perspective. But this Indian sale in broken rice is a reflection of this Chinese feed demand. So the big question now is like, just how long is this feed demand going to continue? And some questions I like to ask myself. We saw China just announce that you're allowed to have 3 kids in China. I mean, this may be not in our generation, but you're probably prompting some kind of population growth. And that's going to have mean more mouths to feed. More mouths to feed, and feed demand doesn't necessarily mean it's going to a rice bowl, but rather it could be going to noodles, it could be going to brewing, or it could be going to various other industrial uses. And that's really what China has been all about. Again, prices. I don't need to share this. If you look at Indian brokens, it's right down here, 270. I can tell you last week, I received a WhatsApp message from an Indian supplier. 255 I got. The thing is that we have to aggregate these numbers to show you the price difference. Up here, North America, I mean, further up is North America. In this middle here, you have Thailand, Vietnam, Pakistan, and then you have India down here. That's just the price point of view. So basically, I wanted to summarize a few things here. Some key takeaways for white broken rice. It's about Indian broken rice, Chinese demand, Chinese feed demand. I've said all these enough times. And supply is very India dependent, with all the other markets really showing much smaller quantities in the world broken rice market. So that's something that we have to consider. Now, if you look at broader, I'm going to just try and touch on, I've already touched on India's rice. It's not just broken rice. I wanted to feature that Chinese element, which is important to Pakistan as well. China's feed industry demand, very important for broken rice, as well as this global demand picture where consumption is growing above production. And then shipping supply and tightness. I can't say enough that cost of shipping has become so important that it's a part of every buyer's calculations, that more percentage of his cost is based on the shipping cost than on the FOB price itself. That I'd say that even the FOB price, it's come naturally to India because a cheap price plus the ability to utilize more ports, breakbulk shipping availability, there's a less reliance on containers that's possible from India. And these are some of the advantages that India has taken in the last 2 years. But looking slightly ahead, 2022, what if India does not have this free food program? This free food program is almost making it possible for you to get these super nice coats from India. But what if that's removed from the picture? That's why I asked the question, can Pakistan step up production? I started looking at all the other origins in the world that are export based and see who are the ones who can come and cover up for what India has done. India did the world a favor in a lot of ways. During the pandemic years, stepped up, suddenly you have 14 million, 16 million, 20 million talk of export. That's really supplying a market that should have been $600 price today. No, if it wasn't for India coming in from March 2020, before March, India was actually not that available. Now, looking at basmati rice, this is where I wanted to show you production. It's been from India mainly, but if you look at Pakistan, Pakistan has been slowly rising, especially in the last 3 to 4 years. Why is Pakistan rising? And I'm going to show you a lot of this got to do with that European demand, food safety opportunities that have shown up, and that's seen. Pakistan basmati rice sales to Europe in our data is higher than what you sell to the Middle East. It's been happening like that for the last 2 to 3 years. No, so this the price part of it is really a reflection. The thing about it is like Pakistan's offering in supply is still limited relative to India. India's got this massive supply base compared to Pakistan. That's why India can export 4 million tons of basmati rice while Pakistan shows 1 million tons. So really, that's the difference. It's like a big brother, small brother kind of thing. You have that geographic indicators argument that's ongoing right now in Europe. But to me, Indian and Pakistan basmati are both important components within. So I wanted to show you monthly exports of Indian basmati, which is lower. Again, shipping costs have risen. People are not stocking in Dubai and Oman and other markets that are playing more of a hub and spoke type role. The same thing can be said for Pakistan. Then you quickly move to Where is India selling its rice? I'd say 80% of India's 85% of India's export goes to the Middle East. 80 to 85%. Take a look at Pakistan the last few years. It used to be UAE, Saudi Arabia, a lot of, if I take further to 2018, I should have done that. I'll show you much more Middle Eastern markets. Today, the top 3 buyers of Pakistan rice for January to March, basmati rice, is UK, Belgium, and Netherlands, as far as our data. You have Italy in there, Spain in there. Europe as a segment is a much larger part of that Pakistan basmati rice sale. But Pakistan every year has to look over its shoulder and see if India is going to do something about food safety and try and claim back markets that were previously theirs 4 years ago. So really, we see a higher supply in basmati rice market. The COVID and the pandemic situation is not helping. While India has been improving, but that improvement to Europe has been slow. Pakistan sales to Europe have been maintained for 3 years, and seems like there's some good producer-buyer relationships showing up in the marketplace. And India has been quite key in terms of its dominance in Middle East markets. Even within that, you're always seeing Pakistan making efforts. And if you think about it, the shipping and containers issues are now well known. You face it daily. Let me not say it enough times. Food safety is that big issue. More areas in the Middle East market are trying to apply similar European standards to their food safety. This, I see, could be perceived as an opportunity for Pakistan, but can Pakistan single-handedly take on what might be a 3 million ton supply from India? I think this idea of food safety and what's really available in basmati supply needs a little bit more thought in terms of what that demand supply picture looks like. Really with that, I've come to the end of my presentation. I've looked at a number of things. I wanted to show you guys this at the end. It's really just what we see for the first 3 months this year. We've seen Indian exports almost rise by 100%, 98% higher than last year. But last year, January to March, India didn't really export much. So it's not really a fair comparison. But if you look at all this, India and China, and guess what? Chinese old crop. But Chinese also, they're comparing to a very slow Q1 in 2020, simply because that was when COVID was at its peak in China. So really, we have to let this information digest into the next quarter or the next 2 quarters before we can have comparison. You're comparing last year with ban in Vietnam, ban in Cambodia, restrictions in Myanmar. Pakistan was flourishing. India was just beginning to start up from March. So when we compare Q1, it's not really fair. Now, I wanted to talk to you about that free food program. This is one I picked off from the Indian press. I think it's from the Indian Express. So it's like really just to say, this is how much India has released from its stock, and how it's related to exports. That element is very important, especially when you look at next year. When I look at the USDA, they just released their 2022 estimates. A lot of their very more bullish forecasts, I'm not completely in agreement, because a lot of it, you need this to be maintained in order for that continuance of supply availability. What if India does not have that free food program? That's going to be a big question to take into 2022 as a market. So really, in terms of conclusion, not very much different from what I said before. Really, the key highlights to me is that Indian availability looks like it's continued. It's got a bit of a road hump or a pothole along the way with pandemic and COVID. The shipping situation with China closing some with port areas, there are more vessels stuck. It's taking longer times for vessels to load and discharge on a various number of things. Those would be some of the main highlights. Overall, I'd say that without India, the market is actually tighter than you would think. So the thing is that, what's going to happen ahead? So again, these are the highlights I've already shared with you earlier on, and whoever wants can get a copy of this. And I really want to say thanks on behalf of myself and my boss, Jeremy Zwinger, who couldn't be here. It's the middle of the night in California right now, or I should say very early in the morning, about 3 a.m. I want to just say thank you for your time. And if there's any questions, I'm more than happy to answer them. Thank you.
Thank you very much, sir. Thank you, Mr. Subra, for this very, very detailed and comprehensive presentation. I think it was very informative for all of us, especially for the young generation, to see the intense analysis of the last 5 year trends and what to expect in the future. We thank you for your time and thank you for your analysis. We will now move on to the question and answer session. We have some questions from the audience as well. Mr. Amiruddin Mohammed is shortly sending us his video. He has some technical difficulties, so after the Q&A session, we will head on to see his presentation as well. So I think I will start with Ms. Judy, if you don't mind. We have a couple of questions for you as well, from one of the listeners and our viewers. The question is, can you hear me, Ms. Judy? Is that fine?
Yes, you're clear, and there's no problem. We will entertain questions, and I will try my best efforts to answer.
We expect nothing less. Thank you very much. And we just want to, one of the viewers asked that with this new law coming in, how can we ensure Pakistan gets the minimum access volume? We don't want to be a zero metric ton market. We want to be a consistent supplier to the Philippines.
Yes, thank you so much. I would like to explain the difference when we still had that quantitative restrictions and before the removal of the regulatory power of the National Food Authority under the new law. Before, as you have experienced, NFA managed the importation, NFA managed and evaluate the volume of applicants for importation. Among the importers, the volume depends on the capacity, financial capacity of the importer. That is what NFA was doing in the past. So there is an assurance of Pakistan market. Then they are assured because once the importers are qualified to import and the volume of rice that they want to get from Pakistan would be depending on the price, of course, the shipment period and the volume that is being sought by the Philippine importers, there is an assurance. For now, I would like to believe that there is still an assurance of the Pakistan rice to the Philippine market after this law. In fact, the basis for the issuance of Executive Order 135, lowering the tariff rates from most favored nations like India and Pakistan, is that it encourages that market to be brought into the Philippines. But the difference now is that it's not the NFA that will now determine the volume to be imported by a local importer from Pakistan. We will have to determine first how it will go through, because our president had considered the requests of these favored nations to reduce the price of tariff equal to that of the ASEAN countries. So we will have to, there is nothing that was recorded or included in that volume, but we will have to coordinate with the Office of the Department of Agriculture and also with the Office of the President. The issuance, I think I would like to believe so, is that they want, the government of the Philippines wants the Pakistan market and India, of course, to be included as importers or exporters of the Philippine government.
Thank you very much for your views. Thank you. And I think that must have answered the question asked by the gentleman. Next, I would like to move on to Mr. Ramsuri, please. We have a question for Barnas. Mr. Ramsuri, we have a two-part question. First is, many of the people are asking, how do we get registered in Barnas, and how to add their name to the list. And number two, we're asking how to increase the share of Pakistani rice to Malaysia in terms of preferential trade agreements or FTAs. We understand price is of the utmost importance, but because Pakistan and Malaysia have a long-standing arrangement and a good brotherly relations for many years as well. One of the viewers have asked that Pakistan imports $500 million worth of palm oil from Malaysia, but only exports maximum $30 to $40 million of rice. So I mean that's always been an issue with the government in terms of the FTA and its preferential trade. How about in your views, how can we put the foot in the door for additional quantities from Pakistan? I believe the quality is not an issue. First of all, how do we get in, register in Barnas, and how do we increase the quantity to Malaysia from Pakistan? Please.
Okay, thank you, Jangir. Okay, for the first question, to get it registered, actually it's quite simple. I'll probably leave a note to the organizer later on. They can just email to our procurement department. We normally we will entertain all suppliers, but the message that I always pass to the Expo is that to get registered is not a problem. It's just that whenever we do and enter the market, price has to be competitive in the first place. So to answer your question, registration is not an issue. In fact, you can have my contact. I'm glad to receive. We are glad to even expand our supply base from Pakistan. On the second question, increasing of share, I was pretty much expecting this question. Yes, true. In terms of the bilateral trade, our export of palm oil to Pakistan is huge. But in return, our annual import of rice from Pakistan is only about for white rice only about 44 to 40 to 50 million dollars a year. Basmati is only about 15 to 16 million a year. So that is our importation. If I were to look at rice solely for the white rice and basmati, again, like I was mentioning, the looking at the current prospect now, I personally think that our importation from Pakistan is going to increase in the second half of 2021 as well as next year. So that's one. But in terms of the bilateral trade, I think Malaysia, we are open to have the so-called probably not for me to commit, but Bernas being a company representing Malaysia, we are always open to have a G2G arrangement. In fact, Bernas, through our sister company, we do also export palm oil. So that's something that we are keen to explore. In fact, we had a discussion with the Pakistani embassy earlier on this week. We were talking about how we can improve our bilateral trades. So those are in the pipeline. So hopefully, again, if we were to look on commercial factor only on business per se, then the answer would be, if the price is competitive, yes, we will definitely buy. If you see Bernas, Malaysia, we have always been an economical buyer. But however, I'm not close. I am sure we as Malaysians, we are open to having that bilateral trade with Pakistan, hopefully.
Thank you, Ramsuri. One more question for you. So one of the viewers have asked us that you have also imported from India a significant quantity this year. How do you compare Pakistan and India in terms of quality and in terms of service? Okay, all right. In terms of quality, we have we don't have quality issue with Pakistan. That's key. The Pakistan rice, in fact, is quite similar to Thai rice. Average grain length is longer. And quality and the taste is also good. However, in terms of logistics, like I mentioned inside my presentation, we don't face that much hurdle in terms of logistics to get the rice out from Pakistan. So that's good. The only thing with Pakistan is this: rice is only available. It's a once a year crop, so it's only best for Bernas to enter the market during the harvesting season, which is at the end of the year. The only thing is that
India at the moment, since their FOB price is so low, and in fact the freight rice that we build in is cheap. That is why we are looking at some bigger portion from India. But to answer your question, quality wise, yes, we have no problem with Pakistan's rice.
I'm sorry, I was mute once again. I'm not used to moderating online. So I'm just in the learning stage. But again, thank you so much, Mr. Ramsuri, for your excellent views. I would now like to go on to Mr. Subra. Ms. Subra, I think there's not much to ask after your very, very detailed presentation and on trends. I have not received any questions because I feel all of them are quite satisfied with the information provided by you. But I've got one personal question for me and for all the young generation around us. What will your piece of advice be for the youngsters? What to focus on in the future in terms of Pakistani rice? Where should our focus lie?
Sorry, you may have to repeat that because for some reason.
Yes, I'll just repeat. I'll just repeat once again. Can you hear me?
Yeah, because I think the presentation was playing on the website and I could hear everything twice. Can you just say that again, please?
My question is, what will be your advice to the young generation to what to focus on for the future for Pakistani rice?
Oh, wow,
with your vast experience, what should we look for in the long term to improve our global image and a global quality?
Okay, I think we've already seen quite a lot of progress. I wouldn't say just in Pakistan, but across Asia. Markets are very dynamic, and actually a lot of it is brought together by the younger generation. I see more exporters building up their presence, not just in Dubai, but also in key destination markets. And I think you can see even the previous young generation, like the Shahid Tawawalas, are going into backward integration.
They are still young. They're still young.
Yeah, you know, they are the previous young generation, but you know the way he's gone into a different level. You know, see, these are all people who I've gotten to know over the years, and like I say, it's been a pleasure to meet people and see so much of a pioneering spirit from the Pakistan. I'd say overall in Asia, there's a lot more effort you can see in branding, quality, in raising the value of your product. But like I said, the market is a world market. There are price conscious buyers, there are brand builders, and you have to be able to serve that. I think that's the main message here is like to be able to have a supply and a buying side that can meet and discuss their wants and needs and be able to get, you know, as they say, you want to get paid for what you deliver.
Perfect. Thank you very much, Mr. Subra, for your kind words and calling every one of us young. I think that will go a long way with this industry as well. And we look forward to seeing you soon. By this, I would just want to add, Mr. Amir Dine will be after we close this session, we'll be playing his presentation online. He has sent us his online video, and I would like to thank our three speakers here. Mr. Sundaram, Ms. Judy, and Mr. Ramsuri for your time. It is my immense honor, and on behalf of REAP, thank you for your time. Thank you for honoring us with your presence, with your views, and with your exchanges. And we wish you a very, very good year ahead, and happy trading. Thank you very much, and thank you to all the viewers as well.
Thank you so much. I'm humbled to be part of this team, and hope to communicate with you. You can continue to communicate with me via our WhatsApp.
Will do. Thank you very much. Have a good evening.
Thank you.
Good evening.
Thank you.
Please join us on Mr. Amir Dine's presentation. Thank you.
Mr. Abdul Qayyum Paracha, Chairman of REAP, distinguished participants of the REAP Expo 2021. Ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. On behalf of Mr. Mirwadi Abudu Idarus, Chief Executive Officer of Onicor, National Rice Importing Company of Comoro, we extend our deep thanks to the REAP as organizer of this important international trade event. Thank you for having given us this opportunity to participate for the first time in this event. And thank to all members of the RIPS. Actually, you know, we are in a French-speaking country, Comoros. So I am with my colleague here, who just will try to be with me to attend this conference, and we'll try to overcome this barrier language. Anyway, we try to communicate at the best. So you know, this is a language constraint, but we'll try, by the way, to do ourselves to communicate and to overcome this barrier language. So once again, thank you. And actually, we have been requested to deliver a presentation on the subject of the national rice demand in our country. So you should first understand, before proceeding to going directly to subject, you should understand that Comoro is the small market of 1 million inhabitants. And in our region, in the East Africa and in the southeast of the Indian Ocean, we are the only country who satisfies our demand, our whole demand, through importation. So 100% of our demand of rice, we import all our demand from importation. So we import our rice mainly. I can say that 90% of our importation are coming from Pakistan. And also, for your information, we are importing rice from Pakistan since more than 60 years. So Comorian consumers are appreciating, continue to appreciate Pakistani rice. And in our presentation, we'll give you much more details. For the moment, we'll try to introduce our company. Onicor is the French acronym National Rice Importing Company, which is a state-owned company created in 1982 to deal exclusively with the importation and the distribution of ordinary rice in the 3 islands of the Union of Comoros, where rice is the main food. It is the staple food of the population. With the importation and the distribution of ordinary rice in the 3 islands of the Union of Comoros, where rice is the main food. It is the staple food of the population. The company is headquartered in Moroni, the country's capital, which is the second port of the country after Mutsamudu, with regional offices in the 2 other islands of the archipelago, Anjouan and Moalia. The organization is managed by a chief executive officer appointed by the government, currently Mr. Mirwadi Abudu Idarusi, and the company is placed under the supervision of the Ministry of Economy and Trade. Most of the demand is for ordinary rice, which is the staple food of the population of low income, which is once again around 1 million. The rice of superior quality and high grade, as jasmine fragrant rice from Thailand and basmati variety, is consumed by a new middle class, which is steadily increasing these last 10 years. According to local regulation, the ordinary rice is defined as any white rice with a percentage rate of broken higher than 5%. Now, we'll try to give you the specification of the ordinary rice. So traditionally, Pakistani rice in general, and IRI6 in particular variety, is well appreciated by Comorian cuisine and by the consumers, as well as Pakistan basmati rice. So for Pakistan ordinary rice, the specifications are the following. So the commodity, you have the details in the presentation, white rice and long grains, and the variety is IRI6. The broken percentage is 10% maximum. So we have, in the past years, we have imported IRI6 with 20% broken maximum, But now, from 2006, we're importing rice with this percentage of 10% broken maximum. The other details of the specification for Iris 6, we'll find much more details in the presentation. Concerning basmati variety, we are importing 1121 Sela basmati rice long grain, 100% clean, premium quality, and the broken is 1 to 2% maximum. So the other details for the basmati specification, you will have the other details in the presentation. In regard of the quantity, the total annual demand is estimated to 60,000 metric tons for ordinary rice and approximately to 20,000 metric tons for basmati variety. Metric tons for ordinary rice and approximately to 20,000 metric tons for basmati variety. So this is the total demand, but the total demand, this quantity is delivered through cargo of around 5,000 metric tons per month. So you have the whole demand, which is estimated to 16,000, and every month we import through a container around a quantity of around 5,000 metric tons that we can discuss with the suppliers. It can be more, we can import more than 5 metric tons per month, but generally we are importing about 5,000 metric tons per month. Now, concerning the importation and payment condition, we are importing through international tender. We are purchasing by tender. This tender can be opened to all the company, to all the traders, but it can also be restricted. And the quotations are generally expressed cost and freight basis per metric ton, free out the two ports of Moroni and Mutamud. Once again, the good is delivered monthly lots, an average of 5,000 metric ton, and this is in container of 20 foot, which equals about 27 tons, metric tons by container. Now, in regard of the challenges, the country food security depends on the availability of rice in the local market. As I told you earlier in the presentation, rice is the main food for the Comorian population. So the country food security depends on the availability of the rice in the local market. So the government, through the National Rice Importing Company, ONICOR, is due to guarantee a continuous supply of the market to first avoid shortages, but to also offer a product of good quality at competitive prices. The company is working now out a project which consists of importing rice partially in bulk instead of container, and buying the commodity on FOB stored basis, expecting to reduce accordingly the importation costs, strongly impacted by the freight costs. So, ladies and gentlemen, honorable participants, thank you for your kind attention. So, as you have witnessed in the beginning of the presentation, we have some technical issues through internet. So you can send your questions, you can record your questions, but you can also SMS them, so by text messaging of your question, and we will try to reply your question later. We are sorry for the inconvenience, as you saw that we have faced technical problems presentation. we hope that later in the coming, in the next coming events, we'll take all the steps to avoid this inconvenience. And once again, thank you for giving us this opportunity of participating in this event for the first time. And we are, for the next coming days, we are with you, and you can send your questions through SMS messaging. You can record all your questions, and we'll try to give reply to your questions. And once again, I have my colleague with me here. You have in my right Mr. Omar Din Mohamed, who is the officer in charge with the trade department in the office. You have the technical, the advisor lawyer of the company, and you have also Mr. Rashid, who is in charge with the logistics department, as well as the chief executive officer in charge with administration in the office. Thank you once again, and we thank with all the participants for the following up of the conference. Thank you. Go.